Trading and investing both involve trying to grow your money in the stock market, but they go about achieving this goal in very different ways. Take a look at the video to find out the key differences between trading and investing and discover which approach is right for you. Hi there, welcome to my channel where we talk money and having more of it. Let's talk about stock trading versus investing. Stock trading is about buying and selling stocks for short-term profit with a focus on the share prices. Investing is about buying stocks for long-term gains. So one way to look at it is to think of the trader as buying a packet of seeds, hopefully at an unusually low price, and then wanting to quickly turn that around and sell them at a higher price as the market moves. The investor, on the other hand, is buying the packet of seeds to plant them in the ground, to water them, and to watch them grow into a nice big crop, and then to profit from either selling the seeds from the crop or the produce from the crop. So let's get away from the gardening, farming talk and take a look at the 4 key differences between investing and trading. The first key difference is the time frame. Traders jump in and out of stocks within weeks, days, and even minutes with the aim of short-term profits. They are more focused on a stock's technical factors rather than the underlying company's long-term prospects. That means that they are more concerned with the direction the stock price will move next and how they can profit from that move. Investors have a long-term outlook. They think in terms of years, and they often hold their stocks through the market's ups and downs. And so their focus is on acquiring quality stocks that they are comfortable holding for the long haul. The second difference is how wealth is created. Traders look at the price movement of stock in the market and try to take advantage of small mispricings, such as when there's a political or regulatory uncertainty causing a share price to temporarily decrease. If the price subsequently increases, the trader will sell the share and profit from the movement. Simply, if you look at trading, you consider it as the attempt to time the market, trying to get in when the market's low and get out when the market is high. Investing, on the other hand, is the art of creating wealth by time in the market, and it looks to profit from increases in the value of quality companies over time, coupled with compound interest and dividends over the years. The third difference is the level of risk of each approach. Trading and investing expose your money to risk, but quite frankly, holding money in your bank account exposes it to risk if it isn't earning more interest than the inflation rate because it's losing value. Trading, however, is arguably the more risky, as the trader does not have the cushion of time and is trying to benefit from short and quick gains. As a result of the higher risk of trading, though, there is a potential for higher returns. Investing can be compared to watching grass grow. In the beginning, not much happens, but then over time, a beautiful, lush green lawn will grow. And investors can manage their risk through diversification, which simply means owning a mix of investments that mitigate against a drop in the market impacting every single one of those investments negatively at the same time. And investors can easily achieve this diversification through investing in mutual funds or ETFs, which are single investment structures that include a portfolio of very many different assets. Another way investors can mitigate their risk is to understand their risk tolerance and to make sure that their portfolio is structured appropriately so they don't panic in a market drop and end up selling their assets at the wrong time. Also, it's important for the investor to understand what their investing time frame is and when they're going to need the money that they're investing, because they can then match their portfolio to meet the needs of that time frame. The last difference is the degree of skill involved. Traders are generally skilled, technical individuals who aim to time the market and learn market trends so they can hit higher profits in a short time frame. They have the time to dedicate to watching the market and to keeping on top of developments. Investors are anyone who has taken the time to learn about investing and who understands that it's a marathon and not a sprint. They have a long-term view and they select quality investments that they are comfortable with holding for the long term. Now, many individual investors may hold their investment in the stock market through their pension, which is for their retirement savings, or through an ISA. And with these types of accounts, they may not check them daily or even monthly, and they certainly may not be making changes to them regularly. But they are likely to be contributing to them regularly over a lengthy time and benefiting from the potential returns in the value of the investments as well as the dividends and such that investments generate. Long-term investing and trading are two different methods for approaching your ultimate financial goal. And whichever way you decide to go depends on whether you want to watch the day-to-day movements on the market or even the minute-to-minute moves, or you're happy to just ride with the market over the long term. And actually, neither approach is right or wrong, but one approach is right for you. As long as you have your goal in mind, a plan in place, and the patience to get there, you can use trading, investing, or even a mix of both to make the most of your portfolio strategy. If you are ready to get started investing, why don't you pop down to the show notes and grab the Investing 101 guide. And if you like this video, please let me know by hitting the like. Share it with any other ladies who want to change their financial stories. And for more money talk designed for women, please subscribe to my channel and hit the bell to be notified when I post a new video. It's been great speaking to you today.